Over the years, covered call ETFs have continued to grow in popularity as a steady stream of people have been making the switch to high-yield income investing. And as I regularly cover on this channel, we're constantly seeing new ETFs being introduced all the time into this options-based investment sector. The biggest problem that exists, though, is that while there are some really good ETFs within the covered call realm, there's also a lot of covered call funds that really aren't good. So in this video, we're going to take a look at the best covered call funds currently available across different asset categories. We'll look at some of the best S&P 500, international, crypto, NASDAQ 100, and conservative covered call funds, among others. Basically, if you're building a high-yielding portfolio and you want some high-yielding covered call funds, or maybe you want exposure to just certain asset classes, maybe ones that aren't usually well known for paying high dividends, then hopefully this video will serve as a good resource. In order for an ETF to be considered among the best, in my opinion, within the covered call category, it needs to offer the following two things. It needs to pay monthly dividends, or weekly if applicable, and it also needs to provide share price gains. In other words, no ETFs that have seen constant NAV erosion. So with that in mind, we'll get right into it. This first ETF has offered the best share price growth out of any other covered call fund that's been around for at least 5 years. But at the same time, it does offer a lower yield than most other covered call funds. However, it does still provide monthly growing dividends, and it's a great consideration for those who are most concerned about NAV erosion and want a more conservative holding in this space. The Amplify CWP Enhanced Dividend Income ETF, ticker DIVO, has a really great track record of stability and total return. Since being launched, DIVO has delivered an average annual return of over 12% per year with dividends reinvested. That's a higher average yearly return than what the S&P 500 has historically provided in an average year. It targets holdings that have a long history of providing stable dividends across a wide array of different sectors, then does tactical covered call writing on those holdings. With a yield of roughly 4.8%, it's not spectacular for this investment type, but it's a much higher payout than a typical S&P 500 stock. So if you are an ultra-conservative investor, then I'd recommend DIVO as a good consideration. Going from one extreme to the other, let's move on from a very conservative covered call fund to cryptocurrency funds. There's several covered call funds that are exposed to various cryptos or cryptocurrencies, but the one that I think does the best job within the crypto space is ticker BTCI, the NEOS Bitcoin High Income ETF. This fund seeks to pay monthly income that's generated from writing call options on Bitcoin futures ETFs. So it is a little more straightforward than a fund like DIVO. BTCI is currently up over 16% before factoring in the dividends, although that can be attributed to launching just before a Bitcoin bull run. But this ETF has consistently offered a very high yield, currently over 27%, and it's also grown its dividend a little bit. It also offers exposure to Bitcoin with a little less volatility. So if you are bullish on Bitcoin and you want high income from it, then BTCI, I believe, is probably the best option that exists. Moving on, for people who want a lot more diversification, an international covered call fund is another way of achieving that. These are ETFs that hold international companies outside of the US and write covered calls on those holdings. The majority of dividend and nearly all income-focused investors that I talk to don't allocate any amount to their portfolio to international positions. And it's just another way of ensuring that you're well diversified across more categories of investments. If you want to go that extra mile when it comes to diversification, my favorite international CC fund is ticker IDVO, the Amplify CWP International Enhanced Dividend Income ETF. This fund seeks to provide income from international dividend-paying stocks and by opportunistically writing covered calls on those stocks. It currently holds more than 70 international positions, including companies like Alibaba, Taiwan Semiconductor, and Mitsubishi. Although it only yields 6%, its total return has been incredible. Since being launched, IDVO has delivered an average annual return of 19.9% per year with dividends reinvested. That crushes the S&P 500, and it's another holding that's also pretty conservative. International stocks have been soaring this year after a long period of underperformance compared to the US stock market, so it's been a very good time to hold this ETF. International exposure isn't necessary to be a successful income investor, but it's just another option that exists. Let's talk about NASDAQ 100 covered call funds, and in this category, there's actually several that I would consider to be excellent picks. The Goldman Sachs NASDAQ 100 Premium Income ETF, ticker GPIQ, is one of the best options among covered call funds for the NASDAQ 100. Its share price has grown really well since being launched 2 years ago, and it's also one of the cheapest to own in this category when factoring in its expense ratio. As to be expected, because it's grown the most in share price, that usually translates into a lower yield. But it still comes with a 9% yield and monthly dividends, which is still really good. Although I just recently sold this ETF, I still think JEPQ by JP Morgan is a really good pick. This fund is actually available in Europe, and considering options are pretty limited there when it comes to high-yielding ETFs, I would recommend this one to people who live in Europe. My favorite ETF in this category, though, would still be QQQI by NEOS. This one offers the highest yield at well over 14%, and it's pretty good at preventing NAV erosion. Most of the ETFs that I've come across by NEOS actually do have a really good strategy when it comes to combating NAV erosion. I should have said this at the beginning, but I'm not sponsored by any fund provider mentioned. In fact, I've actually never accepted a sponsorship offer in my entire channel's 5-year history. So if you want to support me and you like what I do, then please consider giving this video a thumbs up and also subscribing if you haven't already. Let's take a look at what commodity covered call funds exist that have done well. Because there's been a major boom in gold, all of the best commodity CC funds are the ones that use options on gold futures. And because gold has gone up so much, basically every gold covered call fund has done really well. The first is the FTVest Gold Strategy Target Income ETF, ticker IGLD. This one paid a big special dividend at the end of last year, so financial websites like Seeking Alpha aren't reporting the correct dividend yield. In reality, IGLD yields a little over 7%, which is still pretty good, and again, because gold has soared, it's up over 34% in share price without factoring in those dividend distributions. But ticker IAUI by NEOS has also been a really good gold ETF. It's less than a year old, but compared to IGLD, it offers a much higher yield and better upside. It currently yields over 12.5% according to their website. But as long as gold continues to do well, then both funds will be good investments. If you're bullish on gold, even after the huge run-up that's taken place over this past year, then both are good choices, but I do like IAUI by NEOS more than IGLD. Now let's look at some S&P 500 covered call funds. Just like with the NASDAQ 100, there's a few choices out there that are really great picks. Starting off, we have ticker GIPQ, the Goldman Sachs S&P 500 Premium Income ETF. The same situation is going on with GPIX as it was with their NASDAQ ETF. It comes with a lower yield than some of the alternatives, but it's a good pick if you want more share price growth. This one yields a little under 8%. My favorite ETF in this category, and my favorite covered call fund period, is ticker SPYI. Just like QQQI, it offers a higher yield and does well against NAV erosion. Even though it doesn't yield as much as the NEOS NASDAQ ETF, I still prefer this one because it's more diversified when it comes to the number of holdings and sector allocations. It's not nearly as tech-heavy as the NASDAQ. So that's going to conclude our look at the best performing covered call ETFs. As we continue to see new funds being introduced, it's likely that some of the funds I mentioned in this video would not be mentioned if I were to remake this video in a year or two. But I'm sure there's plenty of funds that I didn't talk about that a lot of people like, so if you have any covered call ETFs that you think are really good and I didn't mention them, then feel free to suggest them in the comments. But with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.